Hi, everyone. Thank you for joining us today. Hi, everyone. Welcome to our first ever virtual first-time homebuyers workshop. We're excited to be here and share some time with you today. I am Kyle Hittner. I'm the Director of Brand Experience at Field & Main, and I'd like to take a second to introduce our team that's with us today. But first, I do want to point out that if you like and share this video, you will automatically be entered to win a $100 Lowe's gift card. So please take a moment either during the video or after to like and share, and you'll automatically be entered to win. All right, team. There's a handful of us here with you today. First, Melanie, would you like to introduce yourself?
Hi, I'm Melanie Hutchison. I am an insurance agent here at Field & Main Insurance, specializing in homes, autos, umbrella, any toy you might have, boats, motorcycles, RVs, lots of things.
Great. And Carl.
Hi, my name is Carl Powers. I'm the Senior Relationship Officer here at Field & Main. Primary responsibilities are with business development.
Thank you, Carl. And Connie, would you like to introduce yourself?
Hi, I'm Connie Grossman. I'm Senior Mortgage Lender at Field & Main Bank, and my primary responsibility is making home loans.
Thank you, Connie. Before we jump in, I do want to point out that if you have questions during the workshop, please feel free to comment on the video. And we have another team member, Amy, who's behind the scenes answering those. If it's more private in nature, feel free to send us a direct message and we'll get right back to you. All right, Connie, you've helped a lot of people buy a first home, a second home, probably maybe even third and fourth homes. You've helped refinance, refurbish, all of those things to make help people have their dream home. And I'm sure you get a lot of questions along the way. So today, since we're specifically focusing on first-time home buyers, I know that one of the questions you mentioned that you get asked a lot is how much can I afford? So can you share a little bit about what we should be considering if we are thinking about buying our first home?
When people come to me and the first question they ask is, how much can I afford? I start by asking, what do you pay now? What have you been accustomed to paying in rent? Have you thought about, do you want to pay more? Do you want to pay less than that? Have you thought about what your current income is compared to your current debt load? And if not, let's sit down and go through those numbers and see where we can get you. Many times we can provide you with an exact figure of what you can afford. We look at your current income. We want to see pay stubs. We'll pull a credit report if you're prepared to go into that, and we will do a pre-qualification. And when we look at that, we can say, okay, we got you approved for this. Here's what you can afford. A lot of people will go, oh, I didn't know I could afford that much. And when that happens, we want you to know what you can afford. However, we also want you to think about what you're comfortable with. So sometimes that's two different things. And you have to take into consideration several things with your home, taxes, whether or not you'll have private mortgage insurance on the loan, if you don't have a 20% down payment. And you need to think about the homeowner's insurance or flood insurance if you're buying in a flood zone.
Well, speaking of insurance, should we reintroduce Melanie into the chat to talk about insurance?
Sure.
Okay, let's add her back in. Hey, Melanie.
Hey, hi.
So when it comes to insurance when you own a home, what type of insurance, what type of insurance should I expect to be looking at?
Sure. Well, we We look at replacement cost on your home, obviously, and your premium will depend on where your home is at. So a lot of people will ask me, can you just give me a rough estimate what my insurance will be? No, the answer is no. There's a lot of things you take into account, how big your home is, if it's brick, vinyl siding, the square footage, things like that. So, we have several companies that we go through and are very competitive on the rates. So that's what we like to do. It's written on a replacement cost basis, unless obviously you're looking to buy a mobile home or a modular home. Then we have specific markets for that. So.
Great. So it's again, like you said, it's not just, okay, this is how much the house is. Can you give me a quote? It's much more detailed and thorough.
Right. It's not written on what you purchase it for. That's not taken into consideration at all, or even what it appraises for. A lot of people will ask me that, well, you've got X amount for replacement cost, but it only appraises for this much. Well, when you look at it in an insurance world, it's what it would take to build it back at today's material cost, not what it appraises for the way it sits today.
Great. Let's bring Connie back in. Connie, was there anything else that you get asked as the lender when it comes to, oh, we lost Connie. Did we lose Connie? Well, let's stall, Melanie, and talk a little bit more about insurance. Or Carl, you're welcome back to the conversation. There's Connie. Hi.
Sorry about that. Somehow or another, I got kicked off.
That's okay. Anything else that you get asked whenever you're sitting down with those potential buyers when it relates to insurance?
Well, they always want to know, well, can you tell me how much it's going to No, I cannot. That's why we have professionals like Melanie helping us. And you can get a quote pretty quickly. We like to send them basic information that we collect for the mortgage. The insurance company wants to see the same types of information about the home and about yourself to provide you with an accurate quote. Usually I can give folks a idea of what they might see with homeowners insurance, just because I've seen so many homeowners insurance policies. I have a rough idea of what a cost might be on a home, but I always tell them they need to speak with the professional.
Right. Sure. Anything you wanted to add, Melanie?
Well, in just playing off that, Connie, every person is going to be different. So if your previous customer purchased a mobile home and that premium was $900 and they lived in the city limits, the next customer that comes along that purchases a mobile home for about that same premium and lives in the county, and their credit score, is different than the previous, that premium could be double or maybe half of that one. So, there's a lot of different things that fall into that. But you're right. You have seen a lot of insurance premiums over the years, and some of them are in line.
Great. So before we move on, Connie, really quickly, when you mentioned income versus debt load. So are you concerned with like cell phone bills or cable bills, or what are you looking at whenever you're looking at that?
So to get someone pre-approved or pre-qualified to purchase a home, we don't look at their cell phone bill, their life insurance bills, or their health insurance, or their child care bills. We might talk about that as part of the conversation of when they decide what they're comfortable with. However, for pre-qualification, we look at specifically creditors' bills, which is banks, credit card companies, or if you have installment debt with, say, a furniture store or something like that.
Mm-hmm.
And we look at those kind of payments, and that is considered your debt load. And then we look at your total income. So when we pre-approve you, we're looking at your total income. So that's not what you're bringing home. we're looking at everything that you would earn before taxes and before your 401k is taken out, or retirement, or if you if you have other things that you put back for, we're not taking those into consideration.
Gotcha. Thank you. And we're going to talk more about pre-qualification here in a little bit. So if you're confused on what that means, don't worry. We'll talk more about it here in just a second. Let's talk about a down payment, because sometimes that can be sort of the spoiler for some. But there are options. So do you mind to share a little bit about sources of down payments and how to alternatives or options for that investment?
Sure. One of the first things that I usually will ask is, do you have a down payment? And if so, where is the down payment coming from? You can, a lot of people will have a savings, or they'll say, no, I don't have one. What's your suggestion? And we'll talk about saving up for a down payment, or we'll talk about grants. Currently, the Federal Home Loan Bank Welcome Home grant is this. The Welcome Home grant is set up to provide people with a down payment source or a source to cover their closing costs. And that's something that you need to think about when you're getting ready to purchase a home. Where am I going to get a grant, or am I going to get a gift from someone? You can get a gift from a family member. So you can, there are many options. Traditionally, the savings option is going to be your best option, your own funds, and we do have to verify the source of funds. So I'm always suggesting to people to go ahead and open up an account with the bank so that they can start saving for their down payment.
Great. And we'll talk more about that later on as well, about options, the different types of accounts, or we have options, and Carl will join us later on in the chat to talk about that. But really quickly, before we move on, I do want to mention on the Welcome Home grant. As Connie mentioned, that is something that is active right now. Those funds are made available by the Federal Home Loan Bank of Cincinnati. There are certain requirements or eligibility requirements for the Welcome Home grant, and we have those outlined on our blog. We have a really detailed blog about the Welcome Home grant, but that's also something that Connie can walk you through and let you know if it is an option for you. But it's up to it. What is there an amount that it's up to, Connie?
Yes, it's $5,000 or $7,500, depending on your qualification. $7,500 is for active or retired veterans, retired or disabled veterans, and the $5,000 is the traditional. It is based on income per household.
Okay.
So there are guidelines, but they're pretty clear, and we can tell you right away if you would qualify for the grant.
Great. It is first come, first serve. So when those funds dry up every year, when they're gone, they're gone. However, every year it reopens, it's reintroduced in March. And I believe, when do we start taking applications or talking about that usually, Connie?
We have started taking applications already. We have quite a few people interested in the grant, pre-qualified, shopping for homes, and we're submitting an application for a grant today for someone. So
Great. I did share a link to that blog on our website in the chat. So if that's of interest to you, view the comments on the video for a link to that blog for more information, or reach out to one of our mortgage lenders. All right, let's talk about credit and pre-qualification. So credit score. What about credit score?
Well, it's good if you have a credit score.
I guess, how do I go about learning what my credit score is? If
Right.
it's good enough, how do I make it? There's a lot we can talk about here, but how do I go about just finding out what my credit score is?
So there's a lot of different ways to find out what your credit score is. If we're going to get you pre-qualified, we're going to want to pull your credit. That is part of the pre-qualification process. So we can tell you what your credit score is when you pull credit, when we pull it for you. And we can talk about if you meet the minimum guidelines for credit with Field and Main Bank. And if you don't, we can help you by recommending things that you can do to get there. People shouldn't be discouraged if they're not sure if they have credit, or if they're not sure if they don't have good enough credit. Sometimes we encounter folks who have some credit but don't have very much, and we have to look at alternative sources of credit, which can be your rental history. It can be your history of insurance payments or utility payments. We just get letters or statements from creditors that state how long you've been a client and that you've always paid as agreed. So sometimes alternative credit sources are an option.
Gotcha. So I have a free, let's say I'm sure you hear this a lot. I have a free tool online that tells me what my credit score is. How is that different from what you're looking at?
Okay. What you see is a consumer credit score, and what the bank sees is a risk-based credit score. The risk-based credit score is often lower than the consumer credit score. So just be aware if you see that you have a 650 credit score on a consumer, that when the bank pulls a risk credit score, it may be a little bit lower than that.
Okay. And when you go to pull credit for customers, I know you get asked this question a lot because I've seen I've been exposed to these types of questions. When you pull my credit for a pre-qualification, does it show up on, does it negatively impact my credit?
It depends. It should not necessarily negatively impact your credit score. I have seen it lower the credit score some. So if you have marginal credit or poor credit, I highly recommend that you think very strongly about letting multiple people pull your credit. You got to be careful with it. If you have excellent credit, let's just say you have an 800 credit score and you know that it's somewhere around 800, then it's less impactful as if you have a lower, for example, a 650. You've got to be a little bit careful about how many and people you let pull your credit, because it can bring your score down. I know that there is something that says that if your credit is being pulled for one particular purpose, mortgage lending or a car, that it doesn't necessarily negatively impact the credit. I wouldn't say that that's 100% for a fact, because I have seen clients affected negatively by having multiple pulls.
So I guess it's important to point out right here that it's important to make sure that when you're entering into this phase of home buying, you're getting into pre-qualification, that you're talking to a lender that you trust.
Yes, I agree, and that you're not in a shopping mode at that time, that you're not going out and buying a car, buying jewelry, opening up credit cards, because opening multiple types of credit at one time will definitely bring a score down.
What if I'm changing jobs? Does that affect my credit score?
Sure. No, that doesn't change your credit score, but it is something that we consider when we're making a decision on lending.
Gotcha. So is there anything else we need to discuss about that? Like, will I disqualify myself if I'm changing jobs during this process, or is it still possible?
It is still possible. We want you to be on the job for some amount of time, depending on what type of loan that we're making, and depending on what kind of career you're in. If you're a teacher and you're going from one school to another, that's just considered as a traditional transition. We're not going to, that's probably not going to be negatively viewed upon unless your salary is decreasing significantly for some reason. If a truck driver and you're switching from one truck driving company to another, as long as your salary is similar, we're probably not going to that's not going to negatively affect you. Again, each person's situation is different, and we, in general, it's not a terrible thing, but it can change what you qualify for. And we do want you to be on the job at least past the normal period of time that they consider, like 90 or 120 days is kind of like your intro time for your new employer. So we would probably say you need to be on the job at least that long before we close on your loan.
Got it. I want to talk more about jobs, specifically commission-based jobs and self-employment kind of jobs. But before we move on, I do want to comment really quickly back to the credit score comment. Melanie made sure to point out that insurance, whenever you're getting insurance for your home, they pull credit as well, but it is a soft credit report, so it does not negatively impact you. But we're just mentioning that so that you're not alarmed as you go through this process. But there is that credit report. Is that proper? Is that the right word, Connie? Yes. There's credit score and then credit report, and they're two different things. So I just want to make sure that I'm saying that properly.
Yes.
Okay,
Melanie, for bringing that up, because we get asked that a lot. Is the insurance company going to pull my credit too?
So yes, they will, but it will not negatively impact your credit score. Okay, so back on to our job. So what if I am looking to buy a home, but I work on I have a commission-based job, or I'm self-employed?
Okay. If you are commission or self-employed, you have to be 2 years of employment history. We have to review 2 years of complete tax returns, actually. You have to have filed 2 years tax returns for us to review that type of income, to consider that type of income in the application. That is just part of the normal underwriting process. We'll want to review all income, but commission and self-employment have to show 2 years for us to look at that.
Great. Okay. So we've talked about credit. We've talked about our job, which is all part of this pre-qualification journey. So what is pre-qualification?
So pre-qualification is getting yourself prepared to make an offer on a home, to go out and shop with a realtor or for sale by owner to purchase a home or possibly attend an auction. We have people get pre-qualified for those as well. Most of the time, especially if you're working with a realtor, they're going to prefer that you have been pre-qualified so that you have an idea of what you can afford and what kind of payment it's going to look like for you on a particular home that you might be interested in. It's a pretty easy process. We can do pre-qualifications over the phone and in person. We are going to be able to do pre-qualifications online coming up in the next few weeks. It's a pretty simple process to get pre-qualified. We just want to look at your current employment status, income, and we'll want to review your credit with you.
Gotcha. And when that process is done, I essentially will get an official letter from the bank that says this person, Kyle Hittner, is pre-qualified to purchase a home and at this amount of money.
Yes, that is accurate. We will give you a letter that you can use to present to your realtor or to whomever you're buying the home from that states what amount you've been pre-qualified for. And that can be adjusted. So let's just say you've been pre-qualified to buy a $300,000 house, but you're only buying a $200,000 house. We can print the letter to show 200. You don't have to show more than you want to on there.
Great. And all of this is really helpful as you are entering into making this really big decision, you have sat down with someone you trust, and gone through, investigated your situation to make sure, Connie, one of your famous lines that I love is, I want to make sure that you are in a home that you're comfortable with, but that you can also afford to buy pizza on Friday night. And that just really speaks to me, because there's, you could buy more home, but it's going to strap you and stress you out and disallow you from enjoying, really getting to enjoy your investment.
Right. And that's the last thing that we want, to see our clients get themselves into a situation where they're not happy with the home they bought, because that's all they can do is live in the home and pay the bill. They don't have any enjoyment of the home in that way. So I try to make sure people will think about, okay, so yeah, I can qualify for a $300,000 purchase price, but maybe I'm more comfortable with a $200,000 purchase price. Just have to think about those things, because I can't predict what your electric bill is going to be. Can't predict what your child care bills are going to be. So you got to take those things into consideration.
Yeah. And you do your best along the way to make sure that they're considering all of those things. You can't predict it, but you can at least help guide them through it and help them put together an outline of all of those things that they need to consider, so that they're making a decision that they're really comfortable with.
Right.
Okay, so now we're to the exciting part. We've got our pre-qualification letter, and now we're ready to start looking for a home. What do I do? What happens now?
Okay, so you got your letter. You start shopping for a home. You find a realtor that you're comfortable working with as well, and go out and find your dream home. Then you sign a contract, and once you sign a contract, you proceed with an application. So the pre-qualification is not actually a full mortgage application. We need a contract on a home for it to be a full application. We need the address of the property that you're buying. So if you will, once you have found that home, you'll just give us a call back, and we'll update your pre-qualification information and get a full application from you. We might be asking more information about details on your assets. We'll be asking for more income documentation. So just the application, when we do that, if your credit report that we pulled is aged, we will have to update your credit.
What is aged? What do you consider aged?
So if it's over 30 days since the time that we pulled your credit for a pre-qualification, we are going to have to update your credit report. And then we will do that. We will order an appraisal on the property that you're buying. Once the appraisal comes back in, we will notify you of that, and we'll if there are anything that you need to know specifically that we may be concerned about on the appraisal, we'll let you know, other than the value on it. We will order title work on the property that you're purchasing, which tells us if there are any liens tied to the property and what needs to be paid off as part of that. We'll order a deed, which will transfer the property from the current owners to you. And then we have an underwriter review. So our lenders here at Field and Main Bank are are skilled in underwriting. However, it goes through a full underwriting process before closing to verify, just kind of a double check to make sure that the loan and the client meet the qualifications for the type of financing that is being applied for. And then if you are applying for a grant, we have to wait for that to be approved. And then we go to closing. So normally we want to try to close a loan in 4 to 5 weeks. If you're getting a grant, it could be 6 to 8 weeks, depending on how quickly they get back to us.
Okay. I don't do any, I want to circle back to when you said when I put in the application. There's no need to put in an application unless you have signed a contract on a house, and then that's your next step. Is that correct?
That is correct.
Okay, so I've found the house, I've made an offer, which I know I'm comfortable with and am pre-qualified for because I have the letter, and that contract is signed. Now I can continue filling out the rest of that application, or fill out the mortgage application.
That is correct. Yes.
Okay. Really quickly on underwriter review, I want to point this out because I think that that's one of the benefits of working with a community bank is that these reviews aren't being done by computers. They aren't being done, out of state. These are local decisions. These are people that are just reviewing to make sure that there's checks and balances, that it's all making sense. Is that accurate?
That is accurate. We do have guidelines that we have to follow depending on what type of loan that you are getting. There are specific underwriting guidelines for each type of loan. We have in-house underwriting that follows the guides provided from the folks that we're getting funding for your particular type of loan.
Gotcha. Okay, so we, I think, again, one thing to point out here is that throughout this process, you have someone that you can trust who's going to walk you through every step of the process. I bought my first home when I had just graduated from college. So I didn't know what appraisal meant. I didn't know what title work meant, what a deed was, what underwriting was. And that's okay. I think that's the point of this conversation today is it's okay to not know what those are. It's actually really probably pretty common to not know what those things are. But that's the advantage of working with someone you know and trust, like Connie or like any of our other mortgage lenders who will walk you through every single bit of the process. They won't assume you know anything. They will walk you through and answer all your questions and try to make you as comfortable with this decision as they possibly can. All right. So I can't buy a house now, but I want to buy one in the future. So what are some things that I can do to prepare?
So if the reason why you can't buy a house now has to do with your credit, you can work on cleaning up your credit, and we can help you depending on what we see on the credit report. We try to help you. We try to explain what's out there and share as much information as we can from that and about how to get those things cleaned up. Let's just say if you had collections, we would talk about how to go about getting those cleared and documentation for that. If it was payments that were past due, you need to be current. Really, you need to be current, not have any past dues for the last 24 months. There are probably some exceptions to that rule. But that's generally what you want to be thinking about when you're starting to shop for a home. Have I been late? When was the last time I was late? And what can I do to make sure that doesn't happen again if I'm seriously wanting to buy a home? We can talk about things that will help to build your credit. If you don't have any credit, it's important to also save up. You have to consider if you're applying for a home loan, we're looking at everything that you have, and we're saying, okay, can this person afford to make a payment every month? We don't want you to purchase a home and then go, oh, 3 months into this, I can't afford to keep making these payments. We don't want to be that burden. You. So we talk about savings and payment considerations. There's a lot.
Yeah.
Think about.
I think what might be helpful to point out here is that if the dream of buying a home is a dream that you have, then is it really too early to sit down with a mortgage lender and talk about where I am now and where I need to be
No,
in the future.
no, it is not. If you are thinking about a home at all, it's never too early to sit down and talk to us.
And you'll get a thorough picture of where you are in this moment, what your credit score is, what your income looks like, what your debt looks like, and if it's not the picture that it needs to be in order to pre-qualify for a home, then Connie or one of our other mortgage lenders can give you a really clear path for how to get on track and get there so that you can achieve that dream of buying a home down the road. Really quickly, Connie, I mentioned some of the terms that would when I was a 20-something-year-old buying my first home that I didn't understand. One that I remember was PMI. And I have no idea what that is. And I think that trips a lot of people up. Would you mind to explain what that acronym stands for and what that is?
Yes. PMI is private mortgage insurance. So that is not the same thing as homeowners insurance. Homeowners insurance is the insurance that you purchase from the insurance company of your choice to cover your home, contents, etc. The PMI, private mortgage insurance, protects the bank if you purchase a home and you don't put 20% down on your mortgage. So if we make you a loan for anything 81% to 95%, if we lend you that much money, then you have to have PMI on the loan until you have paid down to the 80% of the purchase price. Does that make sense?
Yes, it does. And, I'm sure that it makes sense to me. It might not make sense to everyone, but again, this is what we're here for. These are the types of questions we're here to answer. So if it didn't make sense to anyone watching, please feel free to send us a message and we will help get a clearer answer to that question. Another term that I've heard thrown around is like a flood zone. What does that even mean?
Okay, so if you purchase a home in a flood zone, you have to purchase flood insurance. Again, you purchase it from the insurance company of your choice. We want you to use Field and Main insurance if you can, if it makes sense for you. But I think we should have Melanie mention flood insurance.
Okay, let's bring her back. Melanie, ready or not, we're bringing you back in.
All right. Flood insurance, goodness. That is a separate insurance policy, completely separate from your homeowners. A lot of people think that sometimes flood is covered on their regular homeowners insurance, and it is not. It is separate, excuse me, from the federal government, what am I trying to say? It's a separate policy through them that you will cover. If you have a bank loan, they are going to require you to have flood insurance to protect their investments. So a lot of people, if you have a bank loan and you're in a flood zone, which a lot of areas are in this area, they will require you to carry flood insurance. We see, several claims every year. If the water comes up, just make sure that you're covered in that area. So, and it is replacement cost on your home if that's how your policy is written. And your contents as well.
And so let me clarify, does every home have to have flood insurance?
Not every home that has a loan on it. If you're in a flood zone and the bank is requiring it, yes. If you don't have a mortgage on your home, it's at your discretion whether or not you carry flood insurance if you're in a flood zone. If you're not in a flood zone and the bank doesn't require it, you do not have to carry flood insurance.
Great. Okay. Thank you, Melanie. And I know I'm jumping around, but I'm seeing some comments coming in, so I want to make sure we circle back and get this question answered. Back to PMI. You don't have to pay that forever, right?
No, if you can put 20% down, you don't have to pay it. It automatically falls off of the loan at a certain time, which will be stated in your loan closing documentation. But at 77%, as long as the loan has never been late. There's some other language in there, but if you've paid your loan down to 77%, it will automatically fall off.
Right. I don't have to call in and ask and remind anyone. It just falls off.
No. If you have done something to your home, for example, let's just say you've added an addition to your home, or for some reason you believe that the value of your home is significantly increased, or you've made a large principal down payment, and you just want to make sure that to see if the value is, if you've paid down and the value is there enough to release it, you can request it released early in writing.
Got it. All right. One thing I forgot to ask about that I'm certain you get a lot of questions about. Actually, I asked someone about this today. Closing costs. What?
Yes.
I know you can't just say, well, it's this dollar amount because it varies a lot.
It does.
What is it?
Generally, you can estimate that closing costs will be somewhere between 3 to 5%, depending on what type of loan you have, depending on if you choose to escrow your taxes and homeowners insurance. Your taxes and homeowners insurance will not necessarily be required to be escrowed. So you do have to pay your first year of homeowners insurance up front. Normally, that's not considered as part of closing costs, but you need to. We encourage you to think about that, and when we provide a loan estimate to you on a purchase, it has that number on there for you to consider the cost of that. If you're going to have home inspections or pest inspections, which we highly recommend, those are not necessarily considered as part of your traditional closing costs. They can be added to the loan estimate, and you'll often see at least the pest inspection on there. But there are things that you need to consider. Definitely the closing cost when you're purchasing a loan. A lot of people get confused and think that the closing costs can be financed on a purchase, or that they're part of the down payment. They are not.
So when I am in the pre-qualification process, is there a way to estimate at that time, like just a rough estimate of what the closing cost will be, or does it come after the application is submitted?
No, we can give you a rough estimate when we sit down and look at the numbers and what type of loan that we're making. Yes, we can give you an estimate.
Great. You used another word that I feel like you get a lot of questions about: escrow. What is escrow?
Yes. Okay, so escrow for us is when we hold the funds for your homeowner's insurance and taxes annually. So when you purchase a home, typically the seller pays the taxes as a credit to you when you at closing, and then we collect monthly in an escrow account so that we have enough money to pay the whole tax bill when it comes due. Homeowners insurance, you pay the first year up front, and then you start collecting for monthly for when the next year's bill comes in and is paid out of your escrow account, if you choose to escrow. If you do not choose to escrow, you still have to take those things into consideration as costs for your home and plan to save for those.
Right. So some people do choose to just pay it separately and pay the tax bill when it comes at the end of the year, but some people prefer not to worry about it and just have it escrowed in so that when they get that tax bill at the end of the year, they know that Field & Main has already taken care of it for them. Is that correct?
Yes.
Great. Okay, so back to the question where I veered off path. I can't buy a house now. What can I do to prepare to buy in the future? You talked about cleaning up credit. Now, what else are some ways, some things that you recommend to customers of yours that want to buy in the future but can't right now?
I recommend that they just make sure they pay all their bills on time. That's the most probably number one. Make sure you get all your bills are paid timely, that you don't have anything late, that you work on saving up for your closing costs and your down payment, and that you keep really good records.
Okay.
If you have had anything that negatively affects your credit, it's very important that you keep good records. I have had clients who have had medical bills who have negatively affected their credit, and I always tell them, please make sure you keep great records of where you've paid it. Ask them to send you copies of things that you've paid, because we can use that to show that that's been paid off, even if it doesn't reflect appropriately paid on the credit for some reason.
Gotcha. You mentioned savings. I'm going to add Carl back in. Hi, Carl.
Oh, good morning.
Carl is a senior relationship banker. No, that's not right. Senior relationship officer. Did I get that? Okay. With Field and Main. And we brought him in just to talk about, Carl's the kind of guy too, where, you've talked to Connie and you're trying to make a plan for the future. You might sit down with someone like Carl or someone on our retail team even to go through your statement and see, what automatic transfers you have. Maybe you don't have the right checking account, or a checking account or savings account that's dedicated to saving for your home. Is there anything you wanted to add about the retail products that we offer that might help a prospective home buyer?
Absolutely. As Connie mentioned, one of the most important considerations when buying a home is that down payment. You may be thinking, wow, that's a big nugget. How am I going to accomplish that? And oftentimes I'm asked, what's the best way? What's the easiest way to save up for closing costs or that down payment? And the easiest way to do that is to set up an account. And the best way to save money is money that you can set aside that you don't see. So at Field and Main, we were able to set up an account for you and actually set up that electronic transfer where every month you're able to put money aside into that account that you don't even see, but you know what's accumulating. So at Field and Main, we've got a number of different interest-bearing accounts that will meet your needs wherever you are on that journey. And we would love to sit down and talk with you about that.
Great. Thank you, Carl. And when he says that you don't even see, what he's saying is that, you get your direct deposit, your check every month, and it goes into your checking account. And we can work with you to set it up so that when that direct deposit is put into your checking account, there's already a part of that is carved out and going into the other account that you have set aside to save up for buying your home.
That is exactly right. And all that's happening behind the scenes. You're authorizing the bank to pull out X amount of money each month, each week, to go into that savings account for your down payment.
Yeah, how much ever you want, whatever frequency you want, if it's weekly, monthly, however you want to set it up, we can customize that.
That's right.
I think too, something else to point out with our accounts is that, once you have it set up, you've bought your home, then it makes payment super simple. Our team will set it up. You don't have to lift a finger. They set up that automatic payment of your loan every single month. You know exactly how much it's going to be usually. Is that right, Connie?
That's right. Go ahead.
Okay. And you know exactly which day it's going to be taken out so that you can prepare for it. There's no surprises there. Great. Well, what else? Is there anything else you'd like to cover before we wrap up today? Or do we have any comments that have come in, any questions that have come in that we need to answer? We appreciate you all watching today. This is, again, our first live virtual. It's our first live virtual workshop that we've streamed on Facebook and YouTube and LinkedIn. So we're really appreciative of those of you that have joined us today. Keep your eye on our Facebook page, our LinkedIn, and our YouTube. We'll do more of these in the future, and that's probably the first place that you'll see an announcement of an upcoming workshop. So I think with that, we'll go ahead and wrap it up. Anything else anybody wants to add before we sign off?
All good.
Great. Thank you all so much. And our website is www.fieldandmain.com. On our website, there's a ton of information, but you can also contact us. You can email us. You can submit a form. You can call us. We'll put you in touch with the lender in your region. I think I should also point out that we don't just have Connie in Henderson. We have several mortgage lenders. We have lenders in Henderson, in Evansville, in Lexington, Kentucky, Evansville, Indiana, I should point out, Lexington, Kentucky, and Cynthiana, Kentucky. So if home ownership is a dream of yours now or down the road, we'd love to help you. So please reach out. And then, of course, our insurance team is represented here too. Their website is fieldandmaininsurance.com. And they don't just cover personal lines of business; they also cover business lines. So there's a lot of things that we have to share, and there's a ton of information on both of our websites if you're interested. So thank you again for joining us, and we'll see you soon.